This is John Shealy with the Traders Country Club, and this is our video of the day. And I'm going to take a look at wheat. I was on the radio and between the 9 and 10 o'clock Central Standard Time, and I had some emails later that says, John, why did you make a recommendation on the show about for day traders to look and watch for the wheat for a possible bounce? I want to go over that if I can. At the time I happened to be on the air, I noticed that the wheat had opened and was coming off, but you can see that it opens around, as you can see, around 9:30, and it was heading lower, and when our show was nearing an end, I happened to notice that the selling pressure was beginning to end. And the reason, you can see this nice little reversal bar here, and then you had the same kind of thing going on here in regards to a lack of selling pressure. The reason I was even thinking of the possibility of taking a counter trend trade, and that's what this was because of the following chart. Now we're looking at the daily chart. Now I want you to notice that first place, you can see that prices pretty well were moving sideways, couldn't quite decide, and then it sold off heavily. Crop reports, what was going on, fundamental information, but notice this differential in regards to the 40-period simple moving average, which is of course what that line is, and this is a fairly decent sized differential between that average and current prices, especially when they were near their lows at the time I'd mentioned it. And I was just expecting a possible bounce, and that's why I said it was only for a short-term trade. It was only for a trade of $100 to $200. And lucky, knock on wood, it did turn out. But I just want to let you know where it came from. That was it. It was a counter trend trade. I normally don't like counter trending the market, but in this particular instance, it was all lining up. I thought I'm aware of some systems that do trade the market and where they put stops. And as you can see, the market had a fairly decent support zone here. And then if you had developed a longer term trading model about trading the trend, you can see all during this particular pricing area, if you had bought anywhere in here for quite some time, you were underwater. And I knew that large funds, when they are triggered stops, they are so large it normally takes anywhere from 2 to 3 days of liquidation. Day 1, day 2, day 3. So I saw a culmination of events that seemed to imply that there was a chance that wheat would bounce, and that therefore if you had 30-minute candles that were reverse, 5 and 2-minute bar setups in regards to particular different trading strategies, that you could look for a possible bounce, that you could get a good 2 or 4 cent rally out of it. As it turns out, it rallied much more than that, but only because we had basically almost a 5 cent rally at the last 5 minutes of the day. Remembering what happened there, of course, was that anyone who went short today was losing money on the close, and there were a lot of traders who bought on the close because they just weren't going to take the heat and decided to close out the position. You never know what's going to happen in the last 5 minutes in the grain market. That is one of the unusual features about trading grains, by the way, is that it's not uncommon. Their last 15 minutes of the day could very frequently be 50% of the daily range. So just remember that. Trading the grain markets is dangerous enough. Trading them in the last few moments of the day is very dangerous. So just remember. Anyway, that's where that came from. The fact that I thought that was, I'll say oversold, but we have proprietary indicators that aren't basis RSI and stochastics and stuff like that. We have other things that we measure probabilities of a potential turn, and the reason I mentioned it on the airways was because I was getting those kinds of signals. This is John Shealy, the Traders Country Club.